Greetings, members one and all of the Salivation Nation. We've got some economic data that came out, and it's put a little bit of pressure, but largely gold and silver remain pretty much unchanged. Let's explore. Yes, this article comes to us from Kitco. Gold prices have been pressured by a stronger than expected U.S. jobs report. This comes from Jim Wyckoff from Kitco. Gold prices are moderately down in early U.S. trading on Friday following an upbeat U.S. job report that falls into the camp of the U.S. monetary policy hawks who want the Federal Reserve to hold off on future interest rate cuts. And I'm one of those. I think the Federal Reserve ought to just stop and leave everything alone. December gold futures were last down $7.10 an ounce at $1,507.90. December COMEX silver prices were last down 0.082 cents at $17.97, so just under the $18 level there. The just released U.S. employment situation report for October from the Labor Department shows the key non-farm payrolls number up 128,000. A rise of 75,000 jobs was expected by the marketplace. So that's quite a bit more than what they were expecting. Also, the September and August jobs reports saw significantly higher revisions to their initial non-farm numbers. And keep in mind, these numbers can be revised as the next phase or month goes through. So that's something to consider. So this is good news now. Could it be that in the future these numbers be revised downwards or maybe even considerably upwards? We'll find out. All the indications are, at least with terms of labor and wages, that things are moving swimmingly in the economy. And those are really, if you think about it, those are the most important factors, jobs and wages. And because that's going to mean that people are going to be spending money, and that's going to boost things like, GDP and labor participation rate and the like. Following this week's FOMC meeting, in which the Fed cut interest rates by a quarter point, 0.25%, and in which Fed Chairman Jerome Powell implied the Fed is now on hold regarding future rate cuts, today's job data bolsters his notions. Asian and European stock indexes were mostly up in trading overnight. U.S. stock indexes are pointed slightly to higher openings when the New York day session begins. In overnight news, China's Caixin Manufacturing Purchasing Managers Index came in at 51.7 in October versus 51.4 in September and 51.0 forecasts. The October reading was the strongest since February of 2017. This news supported buying in equities markets in Asia. The European Central Bank has a new president starting Friday. Christine Lagarde, the former director of the International Monetary Fund. Mario Draghi was the previous ECB president. The key outside markets, from NYMEX crude oil prices firmly in the U.S. trading today and trading around $54.50 a barrel, meaning the U.S. dollar index is, meantime, the U.S. dollar index is firmer. And so that's kind of why we're seeing not much activity movement in the metals. We'll look at these prices here real time here in just a moment. And because as it gets into technical analysis here, we are seeing it held relatively steady here. Although silver spot did fall a little bit here, kind of a little blip in this particular range right here. And same thing for gold, but that could just be a technical thing here. But that was on October the 30th. On November the 1st, both metals have been relatively stable and steady as we go on out here. But here we go. We've got the precious metals. And as you can see, almost no movement at all, at least right now, as of the moment. So the markets have been relatively under pressure there and pretty steady. And so that means that potentially there's still a little bit of fear out there. Some people think that gold is a little bit overvalued. I posted a video yesterday that some expected dip before we see it go up again. One last little decline which would be a good time to take advantage of buying. Now, the other thing, too, is typically around the end of the year, going into the Christmas season, and in December, we do see somewhat of a dip and relaxing of precious metal prices, so to speak. And people are focused more along what's going on with the holidays and what that entails, and typically things slow down a bit. Not a lot of activity. That could very well be the case. However, this year domestically may prove to be a bit different because we have to contend with impeachment hearings, and they say that could just prove to be hot and heavy towards the end of December. But we'll see where things progress on that front. And we also have the potential for another vote on Brexit coming as well. So those are some factors that could move the metals one way or another for sure. So it's something we'll have to see what's going on there. Palladium and platinum both showed impressive gains. In fact, by today's chart, palladium, though it went up $11, platinum was a clear winner at a 1.83% increase. So it's very interesting. Now, on this thing with regards to unemployment, if you go to the Bureau of Labor Statistics website, they have different things that can tell us about what's going on with the unemployment rate and kind of what that means. Without getting too much into the weeds on this, we can see here is the unemployment rate. Now, the unemployment rate, for those who don't know, is measured with 6 different factors. We're going to look at those in a moment. But the U3 rate is the one that is reported on the news. And it is a good indicator of kind of where things are in the market, but doesn't capture all the different statistics. But you can see here, at least since 1999, that we have reached some record lows here. It's amazing. The actual unemployment rate did tick up, a couple of tenths of a percent or what have you, but by and large, we are seeing some really good numbers here, and it's good news. But then you have to ask the question, and I'll have to, we'll kind of see how these jobs are actually counted, because this is the unemployment rate. In other words, how many people are unemployed, not necessarily the number that are employed. So if somebody is unemployed, more than likely they will, is their side hustle still counted as a job? In other words, if they have a full-time job and they have a side hustle where they're paying taxes on that, is that still considered employed? By most measures, if you have a side hustle and you lose your full-time job, you would consider yourself, in a sense, unemployed, at least for the vast majority of your income. I don't know how that's counted. That's something I kind of like to look into some more research there. But this is a table that shows the unemployment rate by the different factors, both seasonally and not seasonally adjusted over the course of the last year here. So we have the U1, which is a measure of persons unemployed 15 weeks or longer as a percentage of the labor force, and only 1.3 to 1.5%, or 1.4% actually has been pretty steady over the last year. So very low number there. U2 are job losers and persons who completed temporary jobs as a percentage of the labor force. So that does kind of count, in a sense, those who have temporary jobs, or I don't know if you would consider a side hustle a temporary job, but maybe so. And so that kind of gives you a better indicator there. And that number is slightly higher, but still low. U3 is the total unemployed as a percentage of the labor force, official unemployment rate there. And there you can see that number is considerably higher when you consider all those different factors. And we can see here that October did tick up a tenth of a percent there. So there you go. And then U5 is the total unemployed plus discouraged workers plus all other persons marginally attached to the labor force as a percentage of the civilian labor force plus all persons marginally attached to the labor force. So a much stricter number there that's much more encompassing, and so you can expect that number to be even higher. But the number that I like to look at is a U6, which captures everything and even surveys people who are outside of the unemployment. In other words, they ran out of their unemployment, and so it's all unemployed plus persons marginally attached plus total employed part-time for economic reasons, and as a percentage of the civilian labor force, plus all persons marginally attached to the labor force. So it may be that's that side hustle type thing. It may be capturing that there. So in other words, it's capturing those who have lost their main job but have a part-time job somewhere else. And you can see that number also ticked up 0.1%, but by and large, it's been relatively in this area and down a bit. The 7% is considered a good number. Here's another chart that kind of shows this. I think this is an interesting measure here, and that defines this better. Persons employed 15 weeks or longer, and you can see the check marks get there all the way through to discouraged workers, which have been given a job market related reason, but for not currently looking for work. And persons marginally attached to the labor force, persons employed part-time for economic reasons, who want or are available for full-time work but have had to settle for a part-time schedule. So there you go. So it counts all of those factors. So I think this is pretty all-inclusive. However, the thing is how do you really survey and how is this data compiled? I'm not sure. You're really kind of getting in the weeds there. But by the measures over time since 1995 here, here are the different levels of unemployment since 1995 as we look through here. And again, U6 number is the most conservative look, which is going to give the worst case scenario at any given point in time. And and this just goes through 2015, but obviously this has come back down to 7%, which we haven't seen 7% for U6 since before 1990, since 2001 here. And this is at the end of the dot-com boom. This is the big last economic boom before the recession. You can almost see the recessions forming here, and that's where the recession is where you see the unemployment rates go up. So here's one recession. You can see them all climbing up here, and here's the Great Recession. Big, huge jump right there and coming down. And so this has been a slower, it's been a relatively steady decline downwards, and we're seeing that to this day right now. So far, this I think by this look, and these are the most important measures I believe, is employment and wage growth. And we haven't even gotten into wage growth, but I think that's something to consider. The reason why I'm mentioning this in terms of why it's important is so that, number one, you can have a better understanding of how these numbers are categorized. And I do like to look at that U6 number because I think that is going to be the best indicator of where things really are, even though the media doesn't report on it. It doesn't look as good. It doesn't look good. It doesn't look so good when you see, 11% in this case in 2015, or now 7%, close to 10% of that situation. But I do think it's a good measure. We see that it is down and to numbers that are right around the areas where the last boom was, which is right around here, and even right around here, it was almost as good as back in the late 90s. So we're still in good shape, I think, generally on Main Street, and that's the most important thing. Obviously, the stock market is doing well too, but even as such, even with all that going on, look where we have gold and silver right now. Silver is low, but when you think about it, it wasn't that long ago when it was trading around $18 an ounce and in worse economic conditions. So the fact that I think that it is where it is now, I think is a good indicator, and also a reflection of inflation as well. Then we also have gold up there at just short of, it's creeping up there very close to where it was in 2013, 2012. It's continuing to climb up, I believe, and I think we'll continue to see that rise, even if we do see a dip in the short term. So just some food for thought there. Just thought I'd share this with the community here, and let me know what you think about the employment data and what's going on in the economy. And there's so many different factors at play. Somebody had posted a comment and said that the bond yield curve had reversed, and I haven't looked into that, but that's another good indicator if that's the case. And we may be staving off. With all this good news, though, I still think that we're going to see a recession sometime. And the timeline for it, as many analysts have mentioned, either the end of 2020 or 2021 could still happen, you know. But I think in order for it to be called a recession, GDP has got to be below 0%, I believe, what I understand, and for 3 consecutive times that this measured. So there you have it. Post your thoughts below. Keep on holding on. Buy when you can, gold and silver. I think that's the best thing we can do to protect ourselves for what we all know is coming at one point or another, the severity of which we can debate, but I think everybody is pretty much in agreement that we will see a recession coming sometime. But I believe what Donald Trump has been doing as president here in the United States has really helped to keep things good and solid, even despite the concern over trade that I've been having. And if that gets signed, like some predict and say that will, then I think that'll really boost some things. So we'll find out. I'd like to extend a multitude of gratitude to y'all for watching. Encourage you to please rate, share, comment, and subscribe.